Welcome back to Bazaar Morning Call. It's still down 230 points gone on the Nifty. There is a bit of a recovery from the lows, but it pales in comparison to the fall that we've seen in the last few days. So still down and out for the market. But with geopolitical tensions escalating, gas prices is one thing that has continuously been trending higher, especially in places like Europe, which has impacted a lot of industries here in India as well. Germany has also halted the certification process for the Nord Stream 2, a move which could see prices spike even further. To understand what this could mean for a key gas player in India, we are joined by A.K. Jana, the MD at Indraprastha Gas, who joins in now. Mr. Jana, thanks so much for joining us. You know, a lot has changed since the last time we spoke. There's a whole war situation that has broken out, and gas prices have gone through the roof globally. Can you tell us what this really means for prices back home, and especially for companies like yours?
Yes, gas price, now everybody knows that it's going high. Looking into that, the city gas distribution mainly, they are impacted by two ways. One is that the gas price has gone up, and the second thing is that gas allocation. It is based on the last 6 month consumption, half yearly consumptions. So since the first half, the initial 2 months there was no consumption because of the lockdown restrictions, and because of that, gas allocation has gone down. So as a result, we are required to buy the spot RLNG if somebody is not having the long-term contract with them. So looking into our Q3, then what result? Then we have taken a robust decision of how do I balance between this pricing and all. No, we have a robust pricing structure, and we have gone for sourcing basically for the mid-term, you can say for 5 years, the portfolio carrying both the Henry Hub as well as the Brent, and a little bit JCC and JKM is also there. So it is giving me a stable price, basically I can expect. At the second time is that the next half, probably the consumption, the gas consumption has gone up in this second half of this particular financial year. So next first half of the financial year, I'll be comfortable. But as you are asking the price, definitely the price will go up. And we are expecting the way the formula has been devised, probably the $2.5 to $3 increase would be there in the domestic gas price, as well as since we do have the midterm contract from the various sources, and it is not going to give me much impact, for which gradually I'm trying to pass on the increase of the impact of this increase of the gas price, input price, and so that gradually, so that it is not coming the burden to my end customers. I'm today concerned about more of this conversion. The volume should go up if I can maintain my EBITDA per SCM at a particular level, and what is decided around 7 to 7.5 to 8 rupees per SCM. That will give me the whatever the target we have fixed for the top line and bottom line, we'll be able to achieve that. Thank you.
Right, Mr. Jana, two questions. One, by the way, I mean, you know, the city gas distribution company stocks have come off sharply. I mean, I was looking at IGL. It's about, what, 10-15% away from its March 2020 low. I mean, I think MGL is already there. Could you tell us two things? One, what will be margins? I mean, will we see more pain before things start to finally turn around? Maybe a quarter, 2 quarters more of pain before things start to turn up? And in that regard, if you can provide us with some margin guidance. And second, you know, have terms of doing business with oil marketing companies, I mean, generally terms of doing business for you turned extremely unfavorable over the last year and a half or so in terms of what you have to pay as commissions to OMCs. And how can you kind of overcome some of these difficulties?
You see, if you are asking for the gas prices, basically, the margin, what I was telling you, the EBITDA per SCM, that we are targeting around 7 to 7.5 rupees per SCM. And if that is there, the volume growth is around 26 to say 30% growth would be there as compared to the last year. And the sequential growth is coming around, I'm happy to say that around 10% sequential growths are coming for me. And the conversion rate, if you see that the conversion rate for into the CNG vehicle, it is coming around first quarter, it was around 8 to 10,000. Then the second quarter, it was around 14,000. Now we are running with a 16,000. By end of the March, I'm targeting for 20,000. Once they are getting converted, they would be there for me for the long-term business. Around 10 to 15 years would be there with us. So that is my target. And the second thing is that the price, the margin, what you were saying, if you see the bottom line for the last 6 to 7 quarters, it is around 300, except the quarter 4, we have gone exceptionally high, around 400 crores, we have got the PAT. And that is, if I can maintain that sort of thing, then probably the market would be attracted towards the IGL, this thing. The fact is that in the quarter 4, I'm expecting my volume has gone very high. And I can tell you that around 45 lakhs kg CNG, the maximum business are coming from the CNG. That is reaching more than even 45 lakhs kg per day CNG I'm selling. And once the school and the restriction has been entirely removed, now from the 1st March, I'm expecting it will touch even what we have set a target of reaching towards 50 lakhs per day, would be able to achieve it. The question here is that what you are saying, that the petrol and diesel price, the arbitrage between the CNG price and the petrol and diesel, that we are targeting, we are comfortable at 40%. Currently, I'm giving around 55%. So arbitrage is there. So that gives me a margin by which I can little bit increase the price. But looking into the conversion, that will be. And the last questions you were asking about the OMC's margin. No, OMC margin, that definitely it will be passed through. And since it is to be passed through, then definitely the government is also involved, and the OMCs, they are also involved in the CGD business. If they are also increasing, then definitely they would be also impacted by the other OMCs. If someone
Mr. Jana, sure, we got that, we understood that. So you said that the volumes have been pretty high and you're expecting to go to 50 lakh tons as well in terms of the full year volumes. I guess that's what you said, right?
Right.
Okay. So what would this mean? And you also said that because the volumes are moving up, you may not have to hike prices as much. But in the last quarter, you took a price hike of around 8 rupees per kg during Q3. Can you tell us what would be the quantum of price hike, if at all, that you'd have to take because of the rising gas prices? Just some numbers that you can share with us.
Yeah, I can tell you that every dollar increase in the domestic price, gas price, there would be a requirement of around 4 rupees to be increased. Okay, 4 rupees per kg. And as I told you that around $1 was increase was there. So we are required to increase around 4 to 5 rupees that we have increased, as well as we were required to buy, since the gas allocations was as compared to the volume being sold less than that. So that's why we are required to source the high priced spot. Sometimes we have purchased at a price of 25 to $27 per MMBTU. That we have removed. We have taken created a portfolio wherein this mid-term contract is there, which will be basically not more than $15 to $16. I'm expecting even some turbulence is there. The price can go for the this mid-term price with the formula-based Henry Hub as well as the Brent. It would be in the range of $15 to $18. For that we are comfortable. Even it is quite possible that what we are expecting in the month of first week of April, the price may go up by $2.5 to $3, for which we have a plan. How do I increase instead of giving in one way? So that's why a little bit increment may come in the middle of March, and then the April, then the July, like that will be doing.
Okay, Mr. Jana, we'll leave it there today. Thanks a lot for joining us. That's IGL. Let's get back to the markets then. The stock that really stands out is Biocon. Actually, there are two stocks. Biocon is down, is at low point of the day. Now, keep in mind, Biocon had a nice build-up in a weak market. That stock this month was up about close to 6%. And now that the news is out, there's a bit of a sell-on news that always plays out. And also, of course, there's a concern on whether Biocon, as listed entity, is now going to have a bit of a holding company discount, if everything else is separately there. So that's also another concern which has been there for Biocon, but down quite a bit. The other stock that I want to point out is the top F&O loser today, which is the Rain Industries. Now, I don't know, is there anything wrong here, but 12% down on that stock. The market, of course, trying to claw its way back a bit, is off the lowest point of the day, but has not seen any big rally from the lowest point. It's recovered a bit. That's all you can say. But there's no confidence as yet. Mitesh Thakkar is back with us. Mitesh, morning again. Your thoughts on the first 45 minutes of trade and how would you approach it now?
Morning, Anuj. See, the idea is that we've kind of opened down and now trying to hold on to 16,350 now. That's not a pivot. I think, just a random point which has appeared. But at least, after making that low, we're trying to bounce back. But the overall indicator setup isn't very positive. Plus, we have today's gap down to deal with. So I think overall, it will be a market which might not fall much because we are very oversold on the hourly and the 2-hourly charts. So we can take 16,350 as some kind of a reference point for the day. And I think on the upside, 16,575, which is the median point of the gap, could be an important supply point. So broadly, looks like a 220-point range for possibly today and tomorrow, and then we'll take it from there. But for the time being, I think trading with stock-specific bias. Apollo Hospital is something which is, trying to give a positive breakout. So that's a buy with a stop below 4,640 for a target of 4,760. And Britannia, on the other hand, I think that's a stock which is breaking down. So that's a sell with a stop at 33.80 for targets of 32.75.
Mitesh, thanks a lot for those trades. The reason Rain Industries